In December 2021, the dispatches to auto dealers continue to remain a mixed bag. While wholesale volumes for passenger vehicle, two-wheelers and tractor segments decline on an yearly basis, commercial vehicle segment continued to clock a gradual recovery. As per the latest monthly sales figures, Maruti Suzuki's total volumes declined by 4% year-on-year last month, led by a 13% decline in domestic passenger vehicle volumes. M&M's domestic PV volumes increased by 10% YOY, while Tata Motors' domestic volumes rose 51%. Among the non-listed players, Hyundai Motors reported a 32% decline in domestic volumes, MG Motors reported a 36% fall, whereas Kia Motors reported a 34% volume decline. Renault Nissan and Honda too reported a 18 to 17% YOY decline in volumes. As regards two-wheelers, Hero Motors total volumes declined by 12% YOY. TVS Motors total sales fell by around 8% and Bajaj Auto's total two-wheeler sales dipped by 6%. Royal Enfield's total volumes, however, increased by 7%. On the bourses, shares of auto and auto ancillary companies entered fast lane yesterday, with individual stocks rallying up to 8% intraday. So should you add these stocks in your portfolio? On dips, suggest analysts, the sector, especially two-wheeler makers, is not entirely out of the woods yet. Apart from consistent price hikes and rising fuel costs, potential third wave due to the Omicron variant could limit consumer spending, cautions Ashwin Patel, senior research analyst at LKP Securities.
December auto sales were a mixed bag, wherein the two-wheelers continued to perform weak, while the PVs responded well to the strong demand despite chip shortage issue continuing. Last fiscal, PV recovery was led by the pent-up demand in both rural as well as urban markets. However, this year, management mentioned that the pent-up demand ended by September. We can see that the rural markets are still badly impacted post the second COVID wave and are taking time to recover than expected. Further, rising number of Omicron cases and subsequent curbs in several states are impacting demand and may impact further. From an investment viewpoint, market participants can utilize every dip in stocks such as Bajaj Auto, Tata Motors, M&M and Ashok Leyland to enter from medium to long-term perspective.
As per tech charts, the Nifty Auto Index can rise around 4% from the current levels, while select individual stocks may see up to 9% upside. Let's go to Business Standard's Avdut Bakkar for more insights.
The overall trend in the automobile index, Nifty Auto indicates a resistance of 50 DMA placed at 11,150. And whenever that gets crossed, the index is set to jump another 4% towards 11,600. This should result in a positive rally in related stocks which are expected to scale higher levels. Eicher Motor at current juncture has crossed a major hurdle and is ready to surge another 9% towards 2950-3000. Similarly, Tata Motors with a strong gap up is indicating a breakout towards a 520 and 536 level, a rise of another 8%. On another front, Maruti and M&M still need to gain strength to break out on the upside.
Clearly, fundamental and technical parameters show limited upside for auto stocks as scarcity of semiconductor chips, price hikes, expensive entry-level two-wheelers, and firm resistance zones on tech charts cloud short-term sentiment. Now coming to Tuesday's trade setup, stock-specific news flow, global economic data points, and FII activity will guide the market's trajectory. Yesterday, the BSE Sensex index zoomed over 1,000 points intraday during the first trading session of calendar year 2022. It eventually settled 929 points higher at 59,183. The Nifty 50, on the other hand, ended at 17,626 level, up 272 points amid broad-based buying.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.